Thanks for joining us for our free Thursday webinar. I'm Nikki Jovicic from Lookupstrata, and I'm also the Managing Director of Tower Body Corporate in Queensland. I'm your host, and today we're joined by Tyrone Shandiman to discuss unfair practices in the strata industry. Tyrone is a regular presenter, usually representing Strata Insurance Solutions. However, today he's here in his capacity as Chair of the Australian Consumer Insurance Lobby, or ACIL. ACIL recently conducted a comprehensive survey to gather first-hand experiences and insights on the prevalence of questionable practices within the strata industry. And Tyrone will be sharing the results of this survey, and his presentation will explore how these findings can be used to create a more ethical, transparent and consumer-focused strata industry for the benefit of all stakeholders. Before we begin, I'd like to mention that the information in this session, including the discussions arising from submitted questions and chat conversations, is not advice and should not be relied upon as advice, and you should seek independent advice before acting on the information contained in this session. Now, if you are a Lookupstrata regular, you'll know Tyrone quite well. Tyrone is a seasoned professional in the insurance industry. He embarked on his journey in 2004 within the financial services sector. In 2011, he established Strata Insurance Solutions, transforming a garage startup to a reputable firm focused on the strata insurance and servicing over 700 clients. Tyrone's role extends beyond managing operations and tackling complex insurance matters. He also founded the Australian Consumer Insurance Lobby, which focuses on consumer rights within the insurance industry. His efforts and expertise have been acknowledged with numerous industry awards, including being recently named an Australian top broker by Insurance Business Australia magazine. And Tyrone, of course, is also a regular Lookupstrata contributor. So thanks, Tyrone, for joining us again today.
Thank you, Nick. It's a pleasure to be on today's webinar. And I just wanted to firstly start by saying a very big thank you and special thank you today to Lookupstrata. I know that this is a very controversial topic that we're talking about today. I know you've got a lot of strata managers that are probably on the call, some that like what we're doing, some that may not like what we're doing. I know that our organisation and myself are very polarising in this particular issue. But this is a story that needs to be told, and this is a story that whether it's told by Lookupstrata or it's told by another organisation like ABC, it will be discussed. But what I really hope for today is that all of your viewers can get something out of today's presentation, whether you love or hate our organisation or myself. And that's really what I'm hoping the outcome of today's webinar will be. Okay, so our organisation is an organisation that is dedicated to the consumer cause for general insurance issues. I'm not going to read these slides word for word. We have 5 priorities that we're working on. Strata insurance practices is one of those 5 things. To the surprise of many of the people watching today's webinar, it actually isn't the number one thing that we've been advocating on this year. We've spent more time on affordability of insurance in Northern Australia, and we're probably going to be spending a lot of time on the issue of stamp duty in the lead up to the Queensland election. So there are many things that we lobby on, not just strata practices, but it is obviously the one that seems to be getting a lot of attention for our organisation at this very time. Want to really say a very big thank you to the strata managers out there who are good actors. And I really feel for you right now in this conversation because you are the majority in this piece. You are the ones that are being unfairly tarnished by those that aren't doing the right thing. And I really just wanted to say that while this conversation is happening and it's not a great thing for the industry right now, I really hope that at the end of all of this, the good actors come out shine as the shining lights in the industry. And there are many of you, and I just want to acknowledge that. And I wanted to say thank you for doing your job in a way that is professional, ethical, transparent, and that is focused on the consumer. So while today's presentation is going to focus on the not so good actions, this is not intended to represent all strata managers in this way. It's actually intended to talk about the minority. So I wanted to talk about the history of this conversation. It's been a very long history of the conversation. It started when the ACCC did a Northern Australia insurance inquiry, recommending that strata managers are only remunerated by the body corporate because of fiduciary duty concerns. We had a quality of advice review by Michelle Levy, who excluded Strata Insurance and Strata managers from that review, but recommended that a separate review be undertaken. And it was because Strata managers or Strata Insurance didn't fall under a certain section of the Corporations Act. And I think that prompted a group called Steadfast to commission an independent inquiry by John Trowbridge, and that did raise concerns about fiduciary duty again. It recommended transparency in remuneration models and that certain remuneration models be phased out. It did prompt our organisation to review these particular reports and decide whether we wanted to advocate for these issues for consumers. This was not why our organisation was set up, but these reports in themselves really kind of gave us something to review and consider. We then started advocating on this issue. And I think 11 months ago or 12 months ago, Nikki, we had a panel of 7 members on a webinar. I looked at that webinar that we did 11 months ago, and I certainly will say that our organisation stands by what we said back then. I think that what's happened in the time preceding justifies also the comments that we've made since as well. And I do look at the webinar and wonder whether the panel members who held views supporting certain practices in the industry still hold those views today. But I think the other notable actions is our referral of misconduct to ASIC and ACCC of 146 examples, 730 report, which resulted in inquiry into NAT strata as well, which is well publicised. Now, if anyone wants to see what we've done from an advocacy perspective, you can go to the news section of our website, and that will come up in the next slide. But I'm here today to talk about a survey and report that we have recently done. What I want to do is do more than simply read this report. I want to start to give a few more additional insights than what the report says itself. But if anyone wants to go and read this report, it's an 8-page report. You can go to the news section of our website, scroll down. It's a couple of stories down, but this is the report that you'll see on the website. So we conducted a survey, and it actually timed, and it was not by anything other than coincidence. It timed when 730 released their report into the industry. And it meant that we got a lot more responses than we actually expected. So 87 people responded, and I wanted to put 2 graphs up to really just explain, to help demonstrate this survey a little bit more. But we received a lot of responses by consumers, but we were very heartened to see the number of responses that we received by service suppliers in the industry, most notably strata managers as well. And I've put on the left-hand side what I call the negative sentiment index. I wanted to put this, this wasn't in the first draft of the report, but when we sent it out to people for feedback, the comment came in, why are you focusing so heavily on strata managers in this particular issue and not other parties? And I suppose the only reason I put this index in here was just to show that the report is reflective of what we received and the results we received in the survey. So the report really has reaffirmed things that we've already discussed in the past. And the 3 things on the top 3 on the left-hand side really relate to what we've already done with ASIC and ACCC, where strata managers are changing insurance arrangements from one broker to another, from a lower remuneration model to what we consider to be excessive or unreasonable. And they're breaching their fiduciary duty in that, and because they're not informing the consumer of the additional costs involved in that. And they're not discussing the additional benefit the strata manager gets through that particular arrangement. So we've already discussed that in previous discussions. That is in the news section of our website, and we won't go into further detail. Questionable arrangements, I'm going to talk about that in the coming slides. We also heard, again, consumers saying, I got my renewal a day before it expired. It had a massive increase. The strata manager had the quotes weeks before. Coercive tactics, where a strata manager might threaten to stop offering their services or charge higher fees if they don't get their own way on the insurance, and that is backed in by penalty clauses in the industry contracts as well. and cross-subsidisation of remuneration. I'll talk about that a bit later on, as well as misleading representations where a strata manager might really overstate what they do in relation to insurance or make a representation about an alternate proposal, which is not fair and reasonable. This is the thing that I don't think has been discussed enough in this industry, and I want to kind of share my views on black box and questionable arrangements. And I think that this was a question that came through, Nikki, with one of your questioners. And I really probably need slides to really demonstrate what I understand to be these certain arrangements. And effectively, what is the traditional and the practice that occurs in this industry is the traditional model where a strata manager refers an insurance policy to an insurance broker, and they get a commission, and they're required to disclose that as per state legislation. And probably I suppose in 2015, New South Wales implemented legislative requirements for strata managers to disclose commission and disclose marketing arrangements. And unfortunately, and I think that our organisation, is a little bit, I guess, upset with how those negotiations went, because it created a lot of loopholes for strata managers. And what happened was strata managers moved from what was the traditional arrangement to these questionable arrangements, which I'll talk about a little bit further. The first one is a profit share arrangement, where a strata manager refers an insurance policy to an insurance broker. The insurance broker pays a commission to the strata manager, which is disclosed, but also on the other hand, they're paying a profit share. Now, that doesn't meet the definition of commission under the legislation. So effectively, the strata manager is disclosing a lower remuneration than what they're earning. And that's what we call a profit share arrangement. And I look at some of the financial service guides of insurance brokers back when this legislation first came out, and I really question what was the reason of paying a profit share instead of just paying a commission. And I think it really comes down to circumventing the disclosure requirements of legislation. And then you have black box arrangements where, again, a strata manager refers a policy to an insurance broker, and instead of paying a commission, they pay it to someone else. It could be a third-party company, could be a company that provides a certain service, but it's really a payment for the remuneration that they earn, or a superannuation fund. And it's one of these companies that the strata manager is not at arm's length from. So it could be owned by the strata manager, it could be owned by their wife or child, or through some other means as well. And again, there's no disclosure of this arrangement. And finally, again, there's the ownership model, and we've started to see this come up as well, where the strata manager refers it to an insurance broker that they own or hold a share in. Now, these arrangements themselves are not necessarily the problem. It really comes down to the issue of fiduciary duty. And it's when the commission and remuneration is so high and it is not disclosed to the consumer. And I think that regulators and consumers can really flush these arrangements out very easily, because effectively all you need to do is go, am I paying a really high remuneration and commission to the broker? And how is that being distributed back? Because we know that a strata manager can refer a policy to an insurance broker on a 20% commission where the broker only keeps 5%. So if the broker is keeping, or if it's being disclosed that the broker is getting substantially higher commissions than that amount, then I suppose that questions should be asked about where the money is going. New revelations. I'm going to go into these into more detail. And the next slide, got to be very careful of for legal reasons. We are not looking to identify people, but our survey did come up with a series of names of insurance brokers and strata managers that systemically just kept coming up in the survey. And our organisation is in the process, and it is simply due to time only that we are volunteers and haven't had the time to do this, but we are intending on compiling something for regulators to review. But I've made some preliminary calls to insurance brokers I know, and strata managers I know, and consumer groups I know in the industry, and asked them the question, we've got 5 bad actors in strata managers and brokers. Who do you think they are? And it's very interesting to see the same names popping up. So I think that that's probably something that we will be taking more action on when we get the time to do so. I do just want to give some of the strata managers out there that are wondering, is it me? It is not small strata management firms that we're talking about. So if you're a strata management firm with less than 5 staff, you probably are not one of the people that have come up on in our survey. So, but apart from that, I'm not able to give any further information out. Supply chain ownership. So this is really what 730 report really reported on. It's where the strata manager is in a supply chain which is owned by, or there's shares in, or there's an ownership model where there's the insurance broker, you've got the builder, or the other service providers, and debt collectors and so on. Now, supply chain ownership in itself is not necessarily a problem, but it again comes down to the issue of fiduciary duty. Is the strata manager, as the trusted fiduciary that vulnerable consumers put their trust in, recommending these suppliers because they are in the best interest of the consumer, or is it because of the best interest of the strata manager? And if you look back at when those arrangements changed, and look at the cost and the services provided and so on, was it a better outcome for the consumer or a worse outcome for the consumer? Defects inspections. Now, a couple of things. So this has the impact on insurance because defects can significantly increase premiums in insurance, and they have the potential to unduly benefit strata managers because one, higher premiums, higher commissions. Two, if they receive some kind of remuneration from remediation companies or builders, it does have the potential to unduly benefit strata managers. And I always ask my client in my professional capacity, that I get sent defect reports 2 or 3 months before a policy expires. And I always say, well, why did you do this in the lead up to your policy expiring? And it was on the recommendation of the strata manager. And I suppose that there are some real concerns around conflicts here, and it doesn't necessarily mean that just because a strata manager has done that, it's the wrong thing. But I would always recommend that you should take out a defects inspection report, a voluntary one, not in the lead up to a policy expiring, but in the weeks and months after your policy is expired, because you've got more time to fix the defects before they need to be disclosed to an insurer. So this might be more about perception than necessarily about bad actions, but I guess when there is that perception of a conflict of interest, that did show up in our survey. Inappropriate relationships with developers, and this again comes back to the issue of defects, where strata managers, instead of being the fiduciary for the owner's corporation and saying we should pursue a warranty claim against the builder, we should do a defects inspection and really doing the right things when the building is in that 6-year period of a defects warranty period. They're not doing those things, and then the consumer finds out that there's the strata manager has a very strong relationship with the developer. I suppose there are some concerns around conflicts with developers. Has the impact on insurance, again, that defects unrectified does influence and impact insurance. And also, I guess, some of those contracts at the very start of the relationship and changes to contracts as well that might have been more favourable to the developer when they were paying for them, that are less favourable to the owner's corporation later down the track. Finally, inflated maintenance repair quotes. This is a big problem for insurance, and again, it can impact a building's claims history, impact premiums, and if the repair quote is inflated because of commissions and remuneration payable to a strata manager, that can result in a worse claims history and higher premiums. One of the respondents said they were asked by the strata manager to increase their quote by 120%. I don't know why any strata manager would want to do that for their client. Regulatory landscape. Okay, so I think that there was some comments around how the industry is regulated. I mentioned in our report that there were strong criticisms of the SCA, not only from consumers, but some strata managers as well. I note that the majority of strata managers provided very constructive feedback on how the association can improve. But I really went and had a look at the code of conduct, and I looked at all of the points in the code, and I asked myself who is actually policing this code of conduct, because I look at what we've reported to ASIC and ACCC, and I wonder how systemically some of these issues have been allowed to occur. Then we have state legislators that look at the state strata legislation, and federal regulators that look at federal regulation like the Consumer Protection Act or Trade Practices Act. And I think that there is some confusion here with who's regulating who. I think 730 report alluded that some practices were legal under state legislation, but that may not be the case under federal legislation. So I suppose that there has been, some confusion here. And also, I think what is coming through is that there may be small issues that are notified to a regulator, which on an individual basis may not look to be that egregious, but when you look at it systemically, there is great consumer harm. So I think that there's been a lot of education of regulators, that's going on through media, through our organisation, and so on, as to really help them understand the true impact to consumers. So impact on competition. This was an interesting one. I think it really is supporting what we've said before, but I think really I'm going to start by saying that when owners vote on a strata manager, there is one number that shows on a motion at an AGM, and that is the strata management fee. A lot of strata managers are saying we are transparent. We don't take other income. We are at a significant competitive disadvantage to those that do, because our strata management fees are higher. And we've got, and I think really what's coming through is that, and this is a failing of the industry, I think it's really starting to show that strata managers that engage in some of these opaque, questionable, undisclosed practices where it's all about raising other income. I think that we're seeing a movement to that remuneration model, and I really feel that there was an opportunity years ago to really kind of take a stance on this, and I think that opportunity wasn't taken up. And I really feel that this is an area that I think the industry really needs to ask itself the question: does it need to look at the way it's remunerated? Is it reasonable and fair how it's being remunerated, or is it time to look at it and at the way that it's remunerated and look at the way that remuneration models are structured? I want to make this point. When we talk about remuneration, we are not talking about reducing remuneration for strata managers. And I want to acknowledge the job of a strata manager can be very difficult sometimes. You are attending committee meetings and AGMs outside of business hours. You are dealing with that 1 in 2, 3, 4, 500 lot owner or tenant that has significant mental health issues. You are passing on decisions made by committees that you don't agree with, but you are simply the messenger. And I want to say that the strata managers play a very, very important role in strata communities. And we are certainly not advocating for lower remuneration. That is not what we're trying to do in this particular debate today. We're simply advocating for transparency and fairness. I think what's really come out of the discussion since the webinar 11 months ago is this point that legal does not equate to right. And when we have discussions with with industry organisations, I think at the very start of the conversation, it was all about, well, what we're doing is legal, so why should we do anything different? But I think what Linton Besser and what 730 report and what we're doing shows is that actually consumers want professionalism, ethics, and transparency, and they want a higher standard than just what is legal. I make the point, it's not rude, it's not illegal to be rude to someone, but it isn't right. Just in the same way that it may not be illegal to be unprofessional, but it isn't the standard that the industry should be aiming for. It should be aiming for a higher standard than just the legal standard. Feedback received shows that Strata Insurance is not the only issue. It seems to be the one getting all the airtime right now. And I think that really is just, it really does come down to the fact that we have just advocated so strongly on this issue. When I speak to strata managers, consumer groups, it seems as though sometimes what we're doing might be overshadowing other really important issues that aren't getting the airtime. And I think from our organisation's perspective, what we're looking at right now is we're saying, are we doing consumers the right thing by going so hard on strata insurance, or should we be working with consumer groups to deal with the broader issues that have got similar concerns and issues? So I think that that's something that our organisation will be looking to do. While our remit is insurance, I think it's more about working together with other organisations to ensure the insurance issue, along with other issues, are considered as well. What does the future look like? I think that this is probably a slide that's going to be useful for all strata managers and all professionals in the industry, because I kind of feel that since we've published the report, there might be some more things that have occurred or that we know about that I might be able to share in some way. I definitely know that this is not going away. From a media perspective, I think that Linton Besser and 730 and ABC have indicated that they will wanting to get more submissions on bad actors, and that the last update they provided was that they had 1,000 submissions. Definitely not intending to talk about discussions I've had with ABC, only that I know that they're not putting those 1,000 submissions in the bottom of the filing cabinet and never hearing from them again. I would say to the industry and strata managers that you could probably expect that there will be more media stories coming out from very reputable media companies and in the coming future. One thing that I think that we as an organisation will be doing is uniting with consumer groups. I think that after the 730 report, the Owners Corporation Network, Unit Owners Association of Queensland, and our organisation, United, calling for an investigation into net strata, we certainly feel that that is the way that we can really prosecute this argument, is by getting consumer groups together and really jointly advocating, as opposed to ACIL doing it on its own. Regulatory action, I know that it seems like there's not a lot going on right now, but in my conversation with regulators, they are very, very busy behind the scenes. So I'd say that I can see that there might be some more regulatory action occurring. What we really believe needs to happen right now is there needs to be a government inquiry into this industry. And the reason why we believe that is that there is a lot of I think that consumers and strata managers alike, there's a lot of uncertainty as to what the right practices are. And I think that a government inquiry would really empower consumers to know what appropriate practices are, and it would empower strata managers to know how to operate in this field, given the issues that have arisen. So I think that really, I would probably say to the industry that this is where I see a lot of focus in the coming year that will occur for the industry. So I mentioned before, it seems like it's very silent right now. There's been not a lot reported. There's been not a lot occur. I see this as the calm before the storm, and I would really just want to say to strata managers, service providers, just get your house in order, is what I'd say. This is an opportunity for you to get your house in order. You might be asked a lot of questions by your clients, and I presume that happened after the 730 report. This is an opportunity for you to really kind of get your house in order while things are in process of occurring. So what do we want to see for this industry? This is a real philosophical question that we ourselves have asked. And I think that really, I've spoken with the Strata Community Association in several conversations. And I think that one thing that I've made very clear, I mean, it seems as though we've done a lot of work to really highlight problems in the industry and really, you know, possibly paint the industry in not the greatest light. That's not what we want to, that's not how we want to end this conversation, or that's not what we want to be seen as doing. I think really what we want to see is a strong strata management industry, but that's built on a foundation of transparency, accountability, professionalism, and ethics. And what I would really, and I know that the SCA is doing a lot of work right now, working on these things and having 5 pillars and dealing with these issues. And certainly if they can really come out as an organisation that really is shown as an organisation in the same light as lawyers and accountants and so on, I think that would definitely attract more strata managers to become members, and we would support the industry moving down a path of greater professionalism. And I just make the point that I think the cat's out of the bag with these questionable and opaque remuneration models. And I suppose the comment that we would make is that the industry can't achieve a reputable status while these questionable arrangements are still in place. So I really encourage the industry to use this critical juncture. And I really hope that out of the end of all of this, the industry can come out stronger than what it was before. That's my real hope, and our organisation's hope as well. And I think it will. I think it will. I think there's enough strata managers out there that are good actors that will allow that to happen. So look, Nikki, thank you very much for having me today. More than happy to answer some questions. And I just want to say to all strata managers out there, I know that this is a very difficult time at the moment, but I think that I can see some light at the end of the tunnel. So thank you.
Excellent. Thank you so much, Tyrone, for that presentation and for keeping us updated on what's happening out there. I agree with you. It does seem very quiet at the moment, but I think there's lots going on in the background, and we will be hearing more. And one of the things I noticed that came out of the questions that were sent in, a few people had said, are we allowed to look for our own insurance commissions? Do we have to go with the insurance company that our strata management firm has recommended to us? Is it against strata legislation to seek out our own insurance?
I want to make it very clear that the client is the owner's corporation or body corporate. They have the choice. There is absolutely nothing in regulation which stops a body corporate from making the choice to use their own service supplier, including an insurance broker. And I think one thing I caution some strata buildings on is just look at your contract, because there are these penalty clauses in them which do penalise consumers if they go to another supplier. And we have a very strong view on this, that they should not apply in contracts. I know that in Queensland, they don't apply those contract conditions, but in other states they do. I think it just creates a bad perception of limiting choice, but certainly there is nothing in the legislation which stops an owner's corporation or body corporate from choosing their own broker or insurance arrangement. And I do feel that the industry has an opportunity to really support choice as well in those contract conditions.
The admin fee in our insurance premium has increased from $250 in 2018 to over $4,000 for the renewal that's currently due. Is this likely to be simply a commission by another name? Our AGM agenda shows no commission for insurance.
Just because you see a high fee, it doesn't necessarily mean that it is an excessive remuneration model. If a broker is a fee for service only, then obviously their fee isn't going to be $250. What I would highly recommend is asking the insurance broker and strata manager to clarify, is there a commission in addition to that fee? Now, if there is, their questions should be asked about why the fee increased in that period, who benefited from that increase in the fee. But I always say, don't go in all guns ablaze, because it might be that you actually got a better deal and they removed the remuneration, the commission, and just charged a fee only. So it's a simple case of asking questions about whether there's a commission behind that.
How can the committee see in the financials that the strata manager is getting extra commission?
If there is a very high remuneration on an insurance policy, trace where that is going. The traditional remuneration model was always 20%. But then these 20%, and commissions with high fees came up. If a strata manager is not getting a commission on something above the standard 20% commission, why are you placed on that remuneration model? The strata manager could place it somewhere better in your interest. One slide that I didn't bring up on that particular of questionable models, because it was very hard to explain, but it is advanced commissions, where a strata manager might get 3 years of commissions across their entire portfolio of clients. And what might happen in that instance is, yes, they're not receiving a commission at that time, but they've been paid it in another way through an advance payment as well. So what I would say is that if your remuneration is greater than the 20% commission and there's no payment being disclosed, I would say that there is something not right. And it could possibly be that it's one of those questionable arrangements that I discussed earlier in the presentation.
Okay, thank you very much. And then we've had a question come in chat, and I expect that they're under a contract that states that the manager can still charge commission if they don't organise insurance. And so they're just saying, we've been told if we source our own insurance without strata manager, the strata manager will still charge his commission. Is there anything you can do within that contract period if that's occurring?
Yeah, I mean, I think I've seen it before. I think that they really need to be challenged. The strata manager does need to be challenged on this. And I mean, really, the industry says, well, we earn this remuneration for the services we provide. Now, when a consumer goes and finds a service provider outside of the strata manager, it's said that it's commensurate to the work that we do, but when you're not doing the work, why should you be paid the commission? And I think it really comes back to this argument of that slide where I spoke about high ancillary remuneration cross-subsidizing that strata management fee. Look, we do have some concerns about whether those remuneration, those contract clauses contravene unfair contract conditions law and whether they contravene third line forcing. But I think that really what I would be doing if I was a committee is just really highlighting that you don't believe it's fair and that you want the opportunity for choice. And do you want to retain us as a client in the next contract review simply because of this remuneration model? Or are you willing to review and come up with something different? And I've seen that happen a lot. So it's a case of just speaking to the strata manager and negotiating. But we certainly believe that those conditions should be struck out of industry contracts. We use the Queensland model as the model to say, hey, most insurance is arranged through strata managers up in Queensland. They don't have these clauses. Why would you want to create such a bad perception by putting that clause in a contract and limiting a consumer's choice?
Mm. And the committee really has power here. There are a lot of strata management firms around, so it's not as if you have to go to that strata management firm at the end of the contract period. So definitely use that leverage that you've got to negotiate some of those terms. Why do insurers offer commission-based products to brokers and their clients?
The model of commission has been a long-standing model. I guess insurers remunerate brokers and other agents for the services that they provide. So if an insurer uses a broker, they don't have to pay for the marketing expenses to get the client. A broker does certain roles in the administration, and that's how the industry model recognises commissions. Now, am I advocating that commissions on behalf of consumers? Am I advocating that that's the best model? Certainly not necessarily saying that, but that's really what traditionally insurers have done in the commission space. But not all brokers take commission. Some charge fee for services that are upfront, and that's, I guess, it depends on the broker as to whether they want to go down a commission or fee model.
How do you explain to owners corporations that their management fees have risen because commissions are no longer available? And as noted in John Trowbridge's review, he states not all schemes will see a reduction in their premium price when the commissions are removed.
That's actually a really good question, and I actually do think that there is an answer to this. I just think that strata management fees need to go up. And I will say, I've spoken to strata managers who say to me, strata management fees have not increased for 10 years. And is it any wonder why, when there is such competition on pushing that fee down? What I think and what we certainly would support is if commissions were banned or commissions stopped, a campaign which educated consumers around the reason why their fee is going up. And it would probably be commensurate with a reduction in expenses. So it's just a different way that the industry is being remunerated. And it's the question that you have to ask the consumer is, do they want transparency or don't they? And I think it's a very, very easy conversation to have if the industry as a whole gets on board and educates consumers, I think that this is something that really the SCA could take some leadership on. We would support that as well. So yes, I think it's a very easy conversation to have if it goes down that path.
We would certainly support that as well. With regard to the insurance commissions and brokerages paid on Strata Insurance, I've heard strata managers usually receive a commission of 20% for their intermediary services for works performed managing a strata insurance policy, and brokers receive anywhere between 5 and 20% for their services. If this statement is correct, total intermediary charges typically range from 25 to 40%. As a unit owner, I've been told that insurance has increased recently due to natural disasters, etc. However, if up to 40% of the fee is for non-premium payments, surely this is an incorrect statement as to the cause of the increases.
Yeah, look, I will say that I see changes in remuneration models occurring not only at times when we have hardening markets, but also in softening markets as well, where premiums go down, and it's an opportunity to raise the remuneration model. I definitely do think that the question is really in line with the discussion that we're having right now, is what is appropriate and fair remuneration. And I will say that it was traditionally a 20% commission shared between the broker and the strata manager. And it just kept getting bigger and bigger and bigger. And I mean, you saw that example on 730 report of a 60% fee. And you go, when is this stopping? And I think that really, we would not be having this conversation if we stuck to the 20% model that was always the traditional model. But we're now in the position we're having this conversation. And I would say that there are a lot of strata managers out there that stuck to their guns. And Tower, I know you guys, Nikki, you're a director of Tower. I know that there are so many Queensland strata managers out there that have not gone down the path of the high remuneration model, and I applaud you for that. And consumers should absolutely be scrutinising and questioning remuneration commissions in their policy.
Okay, in Victoria, as part of the management agreement, our owners corporation manager requires a minimum income from insurance-related companies, service suppliers, and trades. If the dollar value is not achieved, then the shortfall will be transferred by the manager from the funds of the owners corporation. If the committee does not accept this demand, then the management fee will be increased to cover the shortfall.
This is all about driving that fee down. And really, if that's what you want to earn, why don't you just transparently earn it and charge the fee that's commensurate to what you're doing? And this is a sad thing about owners themselves are vulnerable consumers, because they don't read the strata management contract when they vote. When you've got two options and a low fee versus a higher fee, of course you're going to vote for the lower fee. And it's really disappointing that this is the way the industry has moved. And what I'm hoping our advocacy and other advocacy in this area is it moves back to, let's just even the playing field and make it all about transparency. So I agree. I'm sure that they do exist, and I agree that there are some questions to ask about those models.
Definitely. Okay, last year our strata managers organised a $22,000 insurance renewal. They said no other insurance companies would quote because of our claims history. We did have a large claim in 2021 of around $50,000. The strata managers charged commission of $2,500 plus $707 for their parent company, plus $550 for the broker, plus $250 for insurance training for their staff. This year, we organised our insurance for $13,000, including the broker fee. They organised it themselves. We used the insurance contract in 2023 to get the same level of coverage. Why would there be such a huge difference? Have we been paying more than we needed to? They've been our strata manager for 20 years, so have they been ripping us off this whole time? Can you please give us some advice?
I feel that when you are a broker that has an arrangement with the strata manager and you're automatically gifted the policy, sometimes a broker can become a bit complacent and not go to all market providers when they need to in certain circumstances. So that might be the reason why What happened was in that particular year, they didn't canvass the whole market and only went to 3 insurers and came up with an option that was a lot higher. That might be one of the reasons why that occurred. It might be that they got a better option and that wasn't, just discussed with you. But you can see here where this issue of conflict does arise, and I think that really is what the question is really showing, is that I think that the person that's asking the question is asking, well, is the strata manager acting in my best interest? And I can't say that they didn't. It might have been that the broker just didn't do a good enough job. It might have been that there were no options at that time, and actually the claims history improved over 3 years, and it meant that more insurers this year offered quotes. But that is definitely a circumstantial question. But I guess that you would need to look into that a little bit more to see whether those circumstances applied.
Okay. And we've just been asked what I think is a good question in chat. If we remove the commission completely, where is the additional revenue going to go? Are underwriters going to pocket it, or insurance brokers? I'm an advocate for removal, but there is not enough understanding of the costs on the underwriting side.
Yeah, I think it's obvious that we work in a competitive market, and if their commissions are removed, expenses reduce. And see, this is where I talk about low strata management fees but high expenses, right? So if a strata manager has got a policy if a strata manager is moving away from a commission model, they can go to another broker or the same broker and say, don't pay us anything, reduce your remuneration and reduce the premium and cost. So I certainly see, if commissions are removed, I think that will be passed on to consumers in most instances through savings in those remuneration models that are inflating premiums.
Our Strata Insurance for the original AGM in our new building was valid until the 31st of July 2020 with Insurance Company A. The following year, it was paid on the 30th of May 2021 to our body corporate management company's own Insurance Company B. Every year after, our AGM is in July or August, and we're never given the chance to vote the insurance premium down, as we vote after it's already been paid. Is this legal?
So in all states, I believe that you have to put a motion which includes the insurance on the motion. And obviously that can be voted up or down. But typically the people that oversee the owner's corporation is the committee. I would argue, particularly in cases where a strata manager is receiving, has a conflict of interest, the committee should be voting and looking at that itself. So I would recommend, rather than trying to vote down a retrospective insurance policy, you take those issues up with the committee at the time of the renewal. And I just wanted to say, I can see a comment here about advocating for the removal of stamp duty on insurance invoices, and I wanted to talk about that. We have the Queensland election coming up. Queensland is by far the most unaffordable state in Australia. We are doing a lot of work to get stamp duty removed from invoices. I know that the Insurance Council in New South Wales are looking at that excessive fire service levy as well. There's a lot of work going on in the background on the issue of stamp duty.
Excellent. Thanks, Tyrone. Okay, we had a question from Queensland. How can honest, law-obeying owners make the committee and the manager act in accordance with the laws without going through ineffective, powerless and lengthy processes via the Commissioner's Office or other unaffordable and long legal processes?
Yeah, what I would say, vote with your feet. I think that's the best thing you can do. And again, unfortunately, if you're one owner and other owners don't see in the same things that you see, that may be a very different scenario. But strata communities are democratic. And if you think your strata manager is not doing the right thing by you, the best thing you can do, don't go to regulators, just vote with your feet. And if there is a financial loss you've incurred because there's someone's, the strata manager has broken the law, maybe you can take that up with the regulators. But I would just say the best thing, vote with your feet.
And I know Chris Irons often mentions the word lobbying, so that's what you do in body corporates and stratas across Australia. If you have something that you're passionate about, get out there, start talking to other members of the community, get some support behind it, and lobby.
Yes.
We had a New South Wales question. Insurance is arranged by a strata management company. They sent our insurance requirements to a number of insurance companies, and 60% of the companies advised they did not wish to quote, resulting in only 2 companies providing quotations of significant price increases on last year's policy, although our requirements did not change. The owners corporation has no input into what companies are approached. Can an owners corporation organise quotes, or does strata law prevent that, which we've spoken about previously? The insurance commission is paid in full to the strata management company. Our owners corporation gets nothing. Shouldn't it be split 50-50?
Yeah, look, I think the best thing I'd recommend if you're a committee member and you're not sure, you certainly can get a second opinion from another insurance broker, right? And you don't necessarily need to go with that second opinion, but I think that if you're not sure whether a full review of the market has occurred, if you're not sure whether the provider is doing the right thing, then by all means, not only should you go to a second provider, but it's probably your duty as well to ensure that you are comfortable with the decision that you're making. So I would say in that particular instance, you can definitely get an alternate quote. I've mentioned earlier, there are some contract conditions that you might have to overcome. But I would say if you really don't feel that the job that's being done is right, then just get a second opinion. And possibly it might be that there were only 2 options available, or possibly it might mean that there were other options available, and that will come out in that process.
Okay. And they also asked, is there a body that represents a number of buildings to obtain a lower price volume quote, like we do for our electricity services?
Yeah, I haven't seen that come up, and I think that if there was, I mean, I certainly would see, strata managers looking to do that. I mean, the way that insurance works is insurers try to price insurance so that they make a 15% profit margin. So when you say getting a better price, how much better are you wanting to obtain? And I think that really, in this industry, what I see is I think insurers just put their best price forward based on what they're trying to achieve. So yes.
Can we change the standard strata agency agreement clause 6 that absolves the agent from any wrongful advice, even though the agent or its employees is negligent? In New South Wales, what does to the event permitted by the law mean in relation to one of the clauses? And can the owners corporation seek to alter this clause in the agency agreement as it appears to be unfair? I'm not sure. Could you answer that, Tyrone?
I would like to talk to this because this is a real problem because from an insurance perspective, you are signing a contract which effectively waives the right of the insurer to pursue a strata manager for wrong advice. And in some instances, these contract conditions then go on to say that the owners corporation indemnifies the strata manager for those wrongful acts. And they don't have professional indemnity covering professional negligence. So there are some real problems with some of these contract conditions. My personal view, and I'm not a lawyer, I don't provide legal advice, but I think some of these contract conditions could be struck out as unfair. But yes, I think that, and the challenge is as well, when I talk to clients about the insurance implications and they go back to the strata manager, often what they say is, well, these clauses are the industry clauses, right, in some instances. So sometimes they're not, but sometimes they are, and sometimes they're altered as well. But you can definitely negotiate contract conditions when your contract comes due for renewal with the strata manager. But definitely, I do think that when they're applied when an incident does occur, it may not be that they are applied in the way that they're written sometimes as well.
Do you have anything that you'd like to leave us with at the end of this session?
Yeah, look, I think, as I said earlier, thank you for having us today. It's really good to have to join you. Look, I think, as I mentioned, we really want to see the industry come out shining at the end of this. That's our end goal. And we're going to go through a tough period, but I say to all the strata managers, I think that if we can get the outcomes that we're wanting to see, that are in the interest of consumers, interest of strata managers as well. So yeah.
Okay, that's wonderful. Thank you so much. And we do recommend everyone watch this space on Lookupstrata. Also keep an eye out for what's happening in the broader media on this issue as well. And we'll keep you as informed as we can. Thank you so much, Tyrone. Again, always appreciate the time that you spent. It was great that you did the survey and collated all of those results as well. It's really given us a great insight to what's happening out there. If you gained value from this video, please hit like and subscribe to our YouTube channel. If you're looking for information about parking, Strata Insurance, defects and more, head over to lookupstrata.com.au or sign up to our free weekly newsletter via the link in the description box below.